48, 56, 63, 72, and 79. Support below at 34, 27, 18, 07, and 41 even, 4100. Pivot 4141, support at 34, 30, 27, 18, 07, and 41 even. On the upside, resistance at 48, 56, 63, 72, and 79. All right, welcome to some of the new folks that are here. We are trading mini S&Ps. We're looking for opportunities to scalp the market using the levels we just gave out, in addition to any price action opportunities that might occur. We are looking to trade about 4 to 5 trades during the morning hours. We feel and believe that the opportunities opportunities are there for us in the morning as compared to the afternoon, as the dynamics change in the afternoon. That's a little bit different. The players are different. The volatility is different. So we are kind of focused on the warning stuff to give us our opportunities to trade, and we average about 4 to 5 trades a day. At least that's what we try to. And the key word is average. All right. Obviously, sometimes we are definitely at the mercy of volatility, as you can imagine. We, sometimes we're going to get very volatile and crazy, and other times we're going to get very subdued and tight ranges and not much happening. And patience and waiting for opportunities is very important. As we quickly come down here a little bit, we're looking at the 34 area, and we are coming up here against our settlement price for those of you who like our settlement price. We do have different price action opportunities. I don't mention those right away. Those are part of our education course that we kind of teach. And I kind of hint at them. Okay, so keep that in mind. We also like to scale in to trades. We're not going to be perfect here. Just because I have 34 doesn't mean it's going to go right down to 34 and bounce around. We have to have a little bit of leeway there, so we consequently are scaling in around that area as we come against here our pivot area, our settlement price here. A little bit of a buy for those of you who are a little bit aggressive, and trying to get a little bit of rotation. Now we're trying to scalp the market versus like take positions and try to hit home runs. We are trying to scalp the market based on volatility, obviously. Right now, we're looking about 2 to 3 points on our trades. Other times, when there's more volatile and markets are moving around quicker, we have to expand our stops as well as expand our profit targets. But at this moment, 2 to 3 points with the way the markets have been trading over the last few days here. As you can tell, it's kind of very range bound. Not much is happening. And so consequently, we have to just take what the market gives you, right? And again, I said there's a little bit of little support here at this settlement price at 36 and a quarter, if those of you who are a little aggressive. And again, when I put the numbers together, I'm not looking at sentiment. There's a lot of price action opportunities that are in there within the market, within what we are trying to do, and obviously getting a nice rotation here against the settlement price. Again, our focus is more in the morning hours because we believe that there's some good volatility in those hours, and we also are definitely at the mercy of volatility. We can't create volatility; we only trade it. So consequently, we have to take that into consideration. The VIX is trading at a 19 handle. This is kind of where we like it, a little bit, maybe a little bit more volatile, but we start getting below high teens here. Markets are really going to be tighter, and your opportunities are going to be less, but that's okay. Like I said earlier, we are at the mercy of volatility, so consequently, we have to take what the market gives us and take what the market doesn't give us sometimes. So I know we have a lot of new people in here. Please use the chat box window. If you look at the chat, you'll see the levels that we gave out this morning. And they're a guide to the day as we drifted down to the settlement price there. Again, if you were a little aggressive, maybe you were going to scale in, you had to include that a little, as I mentioned it when we were down there a couple times. So if you were a little aggressive, again, there's different types of traders everywhere across the spectrum. I was lucky enough to be standing around many great traders and many traders in general, and I can tell you they all trade differently. There's not one person that I traded with or knew or had communications with as we quickly come back up here to our pivot area. Upside resistance is up at the 48 area. So everybody trades, has their own risk tolerance. You can, if you're trading small, you're trading bigger. It all depends on your risk capacity as an individual. All right, nobody here trades the same. So if I say something and it doesn't fit into your style because it's too much risk, that's okay. Be a little bit more patient. If we can add some information and add some different setups for your set of trades that you like to make, then if we can add something new to it, that'd be great. So there's always areas that people learn. I learn here all the time, even though I've been doing this for quite a long time. I've had to adjust here from the trading in the pits in Chicago to trading at home on my screen, which, to be honest with you, if I had my choice, I'd rather be on the floor at the exchange yelling and screaming. But technology and the world changes, and so we have to adapt. So that's where we're at. Again, if anybody has any questions, the chat box is a good area, and feel free to ask questions. I don't mind questions, especially if you're here for the first time. And if you need to know anything, please, again, feel free to ask in the chat. We'll repeat the levels in the chat again for those of you who might have missed it. As the market really is very tightly range bound here. Again, if you were a little aggressive there when I mentioned the settlement price, that could have been a little bit of a buying opportunity there. Yesterday, if you were trading in the afternoon, the settlement price also acted as some resistance as the market opened lower and rallied back, and there was a scalping opportunity. Remember, we are scalping the market, right? We're not trying to hit home runs here. So you were able to scalp that settlement price yesterday. It's one of those things that we look at. Does it work all the time? No, but it's a setup that some of our traders like to use. And the most important thing here, for any trader, new or old, is that you have to find setups that work for you, that you can recognize when it develops, right? That it you understand why it's there and how it and how many times you used it in the past and what you're looking for, right? Not every trade is recognizable, or recognition of the trade is very important. It's one of those things that as a trader you have to stay awake for and kind of look for. And they're not going to stand up and say, here I am, take me. Right. So you have to, find those trades that you can recognize. And then the second part of trading is, once you find those trades, is to execute those trades. And execution, again, like I said before, is the second aspect of trading, where once you recognize the trade, which is the first aspect, execution, how you get into it. Do you scale in? Do you try to get, if you're trading one lots, do you just get in at one price? Where's that price? How do you manage it once you get in it? All those things are part of trading. So, and we help you if you are interested in what we do here with the levels and with any of the psychological part of trading. That's what we're here for. So again, feel free to ask questions. as we kind of range bound here and wait for an opportunity to trade. Yeah. So let's see here if we have any numbers coming out this morning. We don't. Tomorrow, by coincidence, is the CPI number that the Fed is and everybody is looking at for some opportunity to get some volatility. Will we get volatility? It all depends on how where it comes out. How close are they containing inflation or not? If you look at the 2 years, 2 years has started to rally. It got up there above 4%. We were hovering closer to 360, 3.6 on the 10 and the 2 year, and now we've gotten above the 4% range. Again, we were talking the twos to tens is a indicator, and we do look at the bond market every now and then to help us with kind of some of our trades. Obviously, there used to be a better correlation between bonds and equities, but not anymore. The market here just range bound still. We're looking at the 34 area as a little bit of support. And again, whatever trades you take on or desire or put on, you always have to have your stop in place, right? Because that's how you can stay in the business. And because if you believe in the levels, we believe in our levels, and we believe that not all of them are going to work, but a good chunk of them will work. If you only trade the levels, that's great. If you trade price action opportunities as well as levels, it's great. If you trade your own stuff, that's great too. So you can accumulate a number of trades. And the focus here is the morning, the volatility, and the number of traders that are in the afternoon do get depleted a little bit. So the trade isn't as true as it could be. But it is what it is. So we just kind of like to focus on the morning hours instead of staying in front of the screen all day. And believe me, I've done that, and it's a little bit tough to stand in front of that screen all day. But it is what it is. As we continue, as we retest the settlement price here, we're looking at the 30. We're looking at the 34 area here as we come down here a little bit. All right, coming down here to the 34 area that we talked about earlier. Again, we scale into that area. If you did take the settlement price and you made money on that, that's great. For re-entering here against the 34, that's again another choice. Again, we are scaling in. So how do you scale in? You find an area, let's say we have the 34. Some people trade scale in a point above and below. Some people scale in half a point above and below the level. Some people trade 2 points above and below the level. That's why you could have gotten the 36 if you did that. Again, everybody here has different risk tolerances, but the point is that it's an area. And how you get into that area is definitely up to each individual's risk tolerance. Okay, so working the 34 area here a little bit. We got down to 35, and you got filled there at 35 if you did jump in. We'll see what it wants to do. Again, keep your stop in place if you're going to take the trade. And we'll see what happens here. Again, if anybody has any questions, feel free to ask in the chat. Again, we're looking for about 2 or 3 point rotations. Again, we got our 2 point rotation here against the 35 entry point there with taking no heat. And if you're trading multiple contracts, you're scaling out of those trades. And here we're coming up. There we go. Now we got the 3 point rotation here against it. Again, remember, everybody scales in differently. So, and you trade different amount of contracts. So not everybody trades the same. But so our 30, we did go right down to 35, which is my first entry point into a level. And so I get in there at 35, I get in there at 34, and I get in there at 33. And that's how I layer in my scale. and that's why I got a little bit of a rotation here off of that. Now, for me, when it comes back down, if it comes back down, I have to manage my risk here. So if I'm trading like 3 contracts at each level, maybe back down, especially if we close this bar here on the 5 minute, probably, adjust. If we close the bar completely and I'm happy with the trade, I'm probably going to cancel, depending on how risk averse you are. I'll probably cancel the trade, at least trade them a lot smaller than maybe just leave the 33 in there. If I'm happy with the rotation and I'm happy with the amount of money I made on the trade, then I just cancel all of them, because technically the level did work for us. And you got a nice rotation here off of that area. So anybody who's been here a while knows that that's how I like to scale in. I'm a point above and below usually, and the level itself. So scale into my trades, and they got a nice rotation. So for me, I'm probably going to cancel my orders underneath. And if I have anything left over, I'll try to ride it up a little bit, maybe get back up here to the pivot with maybe my one lot that I have left, and I'll put in an order, a trailing stop. So that's how we kind of do things around here, in case you are wondering. Again, if anybody has any questions, feel free to ask in the chat. So nothing wrong with that. Let's see if we got any news that we can talk about here that might affect the stock market. Just that I did. Let me see here. I did. One second. Let's see if I can find it now. Well, anyway, they were talking about the CPI number and what the expectations were from Goldman, and they were kind of expecting the number to come out right where they were expecting plus 0.4, I think, if I'm not mistaken, for tomorrow's. Again, that is the big number that everybody looks at. Especially the market is going to look at again, and especially if we're going to raise rates again, because the 2 years started to rally. Break. The yield is closer. Is gotten up. It got up yesterday to 4% there on the twos. There was like a 30% chance of 25 basis point hike in the next meeting. That's gone up to 80 now. So obviously the bond market kind of dictates, I think, probably what might be happening and what not be happening. And definitely there was a rotation there in the bond market to create a higher percentage of chance that there's going to be a rate hike coming in the next meeting. So that's what the bond market can help us. I mean, and so the sometimes you get these, the bond market is reacting to, or the equities reacting to what some of these Fed governors say, and we can just assume that it's going to happen because the bond market is telling us that. But again, it doesn't deter from the fact that there is